Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading and a lot of fun things. Welcome to the world of investing. This is not gambling in the Las Vegas Strip where you are almost likely to lose all your money. Investing the right way, like Warren Buffett, can be simple and you can make a lot of money if you are doing what he called value investing.
You don't have to really worry about what's going on in IPOs, or people win lotteries every day, but there's no reason to have that affect you at all. You shouldn't be jealous about it. I mean, it's great, if they want to do mathematically unsound things and one of them occasionally gets lucky and they put the one person on television and the million that contributed to the winnings with the big slice taken out for the state, don't get on there. It's nothing to worry about. Just all you have to do is figure out what makes sense. When you buy a stock, you get yourself in the mental frame of mind that you're buying a business. And if you don't look at a quote on it for 5 years, that's fine. You don't get a quote on your farm every day.
In this video, I will first introduce you to asset and liability. Then I will tell you what a stock or share is. Next, I will introduce you to the stock market. Lastly, I will speak about how you can buy your first stock. First, when you look at a rich person's house, do you think that's an asset? If they are living in it, then it's not an asset. Take a look at this luxury hotel. When you own it and you are getting rent every single night into your pocket, then this luxury hotel property is your asset. Let's look at this Iron Man's Audi R8. Is that an asset or a liability? When you own a supercar like the Audi R8, first you have to make a payment on it. That money's out of your pocket. Next, to maintain it, it will cost you a lot, like changing for the oil, tires, brake pads, rotors, and regular stuff like premium gas and insurance. It's all coming out of your pocket every single month. Unless you rent it out to make money. Then it's more wear and tear on your personal car, and it's not your ride anymore. Someone else could be riding it, and you are not. Let's look at Iron Man's suit. He designed it, and the government obviously wants it. If he patented that, he could make a lot of money every year. But then it's not his baby anymore, so a patent is also an asset. Just like ARM's design for the chip, because ARM has that patent. That's how they earn royalties and licensing fees when their chips are sold inside a product. A wealthy person is a person that accumulates assets every month, like a chicken farm, because it produces eggs and you can sell those eggs for money and you can have more chickens. An asset can also be small and passive, like a share of a stock that pays you dividend or just increases value over time. What is a share of a stock? Well, I will get into that after this. If you are a regular guy with a regular job that buys cool cars like a brand new Camaro, a big mortgage on a house in a safe neighborhood, and takes your girlfriend out for dinners and takes her to the club and spends your paycheck on her drinks, then you are drowning in liability because his only asset is his job that gives him that paycheck, and his private home is taking out his money every month through mortgage, utility bills, and maintenance fees. So a single family home is a liability. Now that you understand asset and liability, I can move on to what is a stock or a share. A stock is a piece of a business. How many pieces depending on how many shares outstanding for that business. Where do you go do research on your first stock? You go to this free site. It's better than Yahoo Finance. It's called stockanalysis.com. It's what I use to compare and study different businesses in the stock market. Today I'm going to use this easy to understand business. It's called Pilgrim's Pride Corporation. The ticker symbol is PPC. So what you want to do is type in PPC into the search bar of the stockanalysis.com. So when I say PPC stock, it refers to this business. Then you have all the data and info at your fingertips about this business. First, you can scroll down and see what this business is about. Pilgrim's Pride Corporation produces, processes, markets, and distributes fresh, frozen, and value-added chicken and pork products to retailers, distributors, and food service operators. Just think about it like you are Gustavo Fring when you decided to buy this stock, because when you buy a stock, you are the shareholder, which is part owner of a company. Pilgrims is turning chicken nuggets upside down. They are kicking the boredom out of chicken with lip smacking, flavor packing, taste bud pleasing nuggets. They also sell bacon and ribs. Yum!
Egg whites only. No yolks, they're bad for you.
But the yellow part is the baby bird. That's the part I want to eat.
Sorry. Too much cholesterol, which also means no bacon, just good old heart-healthy ham.
Bacon.
For the vegans, they provide plant-based protein offerings, ready-to-eat meals, multi-protein frozen foods, vegetarian foods, and desserts.
Do I look like a man that wants to talk about TTCF stock?
Are you kidding me or are you joking me? Oh my goodness, guys, look at...
Would I feel comfortable having Tattooed Chef as my biggest position? I would. I see crazy revenue growth. I see a management team in place that is ultra driven and ultra hungry. And I see a stock that is setting up to become a food giant in the future. When it comes to Chef, this is my next Tesla stock, and I am 100% confident in that, okay? And y'all losing money from? Embarrassed to be a shareholder of this company. You're gonna bet on an unprofitable stock, you bet small. I did not listen to my own advice, and that's why I've taken over a $1 million loss in this stock.
Maybe this is another reason why TTCF hit the trucker pink sheet and went bankrupt. Okay, market cap is the current market value of the stock, which is $10 billion. It's the total value of all of the company's outstanding shares. It is calculated by multiplying the stock price by the number of shares outstanding. Revenue is how much money they receive from their business. It does not take profit or expenses into account. In this case, it's $17.8 billion. TTM means trailing 12 months. Net income is all the profit this business made. They made $756 million in the most recent year. Next is shares outstanding. 237 million shares are the total number of shares this business has, meaning this business was cut and divided into 237 million pieces, so that each share is worth $44 today for a $10 billion company. EPS stands for earnings per share. PE ratio is price to earnings ratio. The formula is market price per shares divided by earnings per share. In this case, Pilgrim's Pride is traded at a PE of 14. Forward PE is when a stock analyst from banks do an estimate based on their analysis and they decide an EPS number for the next year. Dividend is how some companies decide to pay investors to hold their stock. It's the extra cash some more of the mature type of companies that don't want to invest back into their growing of their business further. Companies like Meta and Google have recently become extra cash rich, that they don't know where to invest back into their business, so they reward their shareholders every quarter for some extra change. Obviously, Pilgrim's Pride doesn't give out dividends. In order to demonstrate dividends, let me take you to Wynn Resort stock, ticker symbol WIN. Here you can see Wynn stock pays $1 per year for one share of the stock you own. So if you own 100 shares of Wynn stock, you will receive $100 every year. It pays out every quarter, so you get $25 every 3 months for owning 100 shares, which is worth $7,463. Next is volume, which are how many shares are traded hands that day on that exchange of the stock market. There are three types of exchanges. There are New York Stock Exchange, which is most prestige. NASDAQ is quality but cheaper. And Pink Sheet, an over-the-counter OTC market, which is the cheapest exchange but risky and thinly traded. But if you want to buy LVMH, Louis Vuitton, in a Canadian bank broker, you have to use the OTC exchange. Which brings us to how to buy a stock. If you are in Canada, you can use your bank's broker. Tell them you want direct investing and they will help you set up an investing account in your bank. The downside is you have to pay $10 commission for every trade you make. Of course, there are cheaper options. There is one called Interactive Brokers. They are a publicly traded company. They charge $1 commission per trade for blue chip stocks. If you are in the US, there are a lot of commission-free trading platforms like Fidelity and Robinhood. Now you know how to buy a stock. Now, how does Warren Buffett invest? Number one, buy the right stock. Buy business with long-term, sustainable, competitive advantages. Two, buy them at the right value. Mr. Market is either so greedy or he is so fearful. Start buying stocks at the extreme fear when you see all red on your screen. That's when you can get the best value for your dollars.
We think first in terms of business risk. The key to Graham's approach to investing is not thinking of stocks as stocks or part of a stock market. Stocks are part of a business. People in this room own a piece of a business. If the business does well, they're going to do all right as long as they don't pay way too much to join into that business. So we're thinking about business risk. Now, business risk can arise in various ways. It can arise from the capital structure when somebody sticks a ton of debt into some business, and so that if there's a hiccup in the business, that the lenders foreclose. It can come about just by the nature of the business. Certain businesses are just very risky. The risk beyond that is that even though you identify such businesses, that you pay too much for them. That risk is usually a risk of time rather than loss of principal. Unless you get into a really extravagant situation. But then the risk becomes the risk of you yourself. I mean, whether you can retain in the real fundamentals of the business and not get too concerned about the stock market. The stock market is there to serve you and not to instruct you. And that's a key to owning a good business and getting rid of the risk that would otherwise exist in the market. You mentioned volatility. It doesn't make any difference to us whether the volatility of the stock market, is averages 0.5% a day or 0.25% of a day or 5% a day. In fact, we'd make a lot more money if volatility was higher because it would create more mistakes in the market. So volatility is a huge plus to the real investor. Ben Graham used the example of Mr. Market, which is we've used it. I've copied it in the report. I copy from all the good writers. And Ben said, just imagine that when you buy a stock that in effect, you've bought into a business where you have this obliging partner who comes around every day and offers you a price at which you'll either buy or sell. And the price is identical. And no one ever gets that in a private business where daily you get a buy-sell offer by a party. But in the stock market, you get it. That's a huge advantage. And it's a bigger advantage if this partner of yours is a heavy drinking manic depressive. I mean, the crazier he is, the more money you're going to make. So you should, as an investor, you love volatility.
Number three, CEO and management is crucial. A good business needs to be run by honest and efficient management with integrity and accountability. Avoid those CEOs that overpay themselves. Congratulations! Now you're on your way to buy your first stock. I am very excited for you. Now you are going to be the owner of assets. Hit the like button and let me know if you have any questions. Leave them down below.